Hello and welcome back to Author's Note. As the fallout from Cyprus continues, the euro has taken a knock. The single currency is now trading below 1.29 against the dollar, as concerns that the bail-in for Cyprus that has seen large depositors faced with a tax on their savings could be replicated in other eurozone countries, threatening the health of the European banking system. For now, the euro has stabilised and currency investors are taking a breather. But what lies ahead for the single currency? I'm here with Stephen Saywell, foreign currency strategist at BNP Paribas, to discuss. Stephen, how do you explain the euro's reaction to events in Cyprus?
Well, Alice, I think actually there's been probably an over-response or an overreaction in the euro, in the sense that I think we've seen markets were already a bit nervous about what was going on in Italy. And then when Cyprus happened, there was quite a big sell-off in the euro. We would suggest it's probably gone a bit too far at current levels.
If we bring up the first chart, actually, we can have a look at how the euro has been doing, particularly this year and last year, and you really see that peak, which was in February, 137 against the dollar, and since then it's really been downhill. And how much of that would you attribute to the Cyprus effect?
Well, I think a lot of it to the Cyprus effect. There is the other side of the coin as well, the dollar side, because remember, euro dollar, we've got to look at both factors. The data coming out of the US has become stronger, and I think the market's got a bit ahead of itself there as well too, by suggesting the Fed may end quantitative easing, or the so-called QE3, early. We disagree with that.
That's an unusual view, isn't it? Because I think almost every analyst on the street at the moment thinks that the dollar is getting stronger and the euro is getting weaker. Well,
that does seem to be a consensus, and you can see that in the positioning. We have our own BNP Paribas FX positioning analysis tool, and that tells us the biggest position out there in the market at the moment is long of dollars. But I think the key point I would say here is QE3 is conditional, so we need to watch the data. Like we saw yesterday with the ISM data, I think we could see some weakening of the US, and Mr. Bernanke has been incredibly dovish, so I think it's going to be very unlikely he exits from QE3 early.
Well, just turning back to the eurozone, if we overlay this chart with another line which is quite interesting, we're looking at peripheral spreads there. Stephen, can you talk us through what we're seeing, and particularly at the end there's a bit of a divergence there?
Yeah, absolutely. This is one of the key charts we use, and it's one of the main reasons why I think the euro dollar will go up. What the red line shows here is it's a measure of eurozone stress. So it's a weighted average by GDP of bond yields in the periphery relative to the core. And as you can see, since the middle of last year, it's been a very good guide to euro dollar. The key point I would say here is euro dollar has sold off by more than the eurozone stress would suggest, and that's why we've got that gap there, that differential between the two. So from my perspective, given the current level of stress in the eurozone, I think the euro is cheap, and there's a strong chance it actually rallies back.
And why do you think that is, that we have seen this divergence? Why would the euro be selling off more than, peripheral debt markets in Europe?
Well, I think it's twofold. Firstly, it's that Fed scenario that we spoke about. I think the market's getting ahead of itself as far as the dollar is concerned. But I think secondly, it's an easy response. Investors see concern in Cyprus, oh, this must be bad for the euro goes down. But remember, the key point we would highlight here is Mr. Draghi's given us the end game. He's told us he's going to do what is required to save the euro. So there's no euro breakup coming. We didn't know that last year during Greece. I think that was a more severe time. So the situation with Cyprus, I'd say clearly it's an issue, but it's not a game changer. It's probably a hiccup on the road towards eurozone integrity.
So Stephen, thank you very much. So the euro, Cyprus could just be a hiccup, and we'll keep an eye on the US dollar as well.